What's up, guys? It's Tom with StockedUp. Welcome to another week's episode of Undervalued Stocks to Buy. The futures are already down 140 points or 4%. The S&P 500 is definitely gapped way down. You can see it's definitely fallen way below my trend line. And I'm going to be going over different stocks to buy this week that I think you can buy that will definitely be affected by the coronavirus, especially including 3M, because they are a very popular company with the face mask contracts and the coronavirus test kits. As we know, a couple weeks back, President Trump had a press conference in which he appointed Vice President Pence, pretty much the leader of the coronavirus task force. So pretty much Pence has went on tour with 3M executives and their CEOs, and pretty much what they're doing is that they're making sure that the United States have enough coronavirus test kits so that whenever people want to get tested for the coronavirus, they can get tested. And 3M is also very big in getting face masks, and they have also secured a government contract for about 35 million face masks or something like that. I will find the article and put it up here, but that's just something that's very good for 3M going forward, especially considering all the coronavirus news, because this is something that will actually help the company, considering coronavirus has been hurting most companies, but it will actually be helping 3M slightly, which is a pretty good thing. And here's the contract for 3M, in which they will be making 35 million face masks per month, which is very good for that company. Although face masks are something that do not cost very much, I would assume that they're like 5 to 50 cents a piece, which would, that's a pretty big jump there, 5 to 50 cents. But I would say somewhere between there is what they're going to be paying price per mask with the contract. So you're not looking at like $35 million a month, but still 35 million face masks is quite a big jump. And the thing is that 3M, they have to actually ramp up production and start contracting out different factories so that they can go ahead and make these masks, because pretty much once the virus hit, everybody bought up all of 3M's masks, and they pretty much went out of stock very, very quickly. So 3M, they're a leading producer of the test kits and the masks, which is two very big things that you need with the coronavirus. And the test kits are going to be the biggest thing because, you can see there's 90,000 people, over 100,000 as of today, infected in China. And if that starts to come to the United States, and everyone who gets the flu, they're going to be like, oh man, I got to test for the coronavirus. So they're going to want to get tested. So they're going to really start going through these test kits and these masks. So all I've told you so far is just pretty much news about the coronavirus and about 3M stock. But if we go ahead and look at 3M's chart, you can see their chart is also very, very appealing right now. They hit a high of $260 a share. And then ever since then, which was at the very beginning of 2018 or 2019, you can see the stock just continually falls lower. Draw a nice trend line here. And it still has not came back up and re-hit this trend. Now, one thing we're going to be looking for is that that 3M is at an all-time support right now. It's very low. It's fallen from, like I said, $260 all the way down to $150 a share, which is over $100 a share jump. It's almost a 50% fall, not quite, but almost. It's about 47%. And if we just go ahead and go back in time, you can see 3M, they like to have these big downturns. And that's what happens with big stocks a lot, is that they go up and then they fall 50% for about a year or two, and then they start rising again. And I believe that's exactly what's going to start happening with 3M right now. If we go ahead and look down here at the earnings down here, you can see this, all these nice little symbols. The green one is the dividend symbol, so you can see they paid $1.44 per share for if you held that stock in dividends right here. And then you can see the earnings per share, which is the blue and the little red, the blue light bulb, and then the red call and the red circular thing. It's a little telephone, actually, if you can't see it. But what that means is that it means that there's an earning call that day. So, they're going to report earnings, and then they're going to have a call, like a conference call, like with the board members or the CEO or the executives. They're all going to talk about the company's outlook. And pretty much you can see the earnings per share right here, 2.23, 2.2, 2.72. Then it drops right here to 1.6 a share. Now, that's a big drop from the twos that they were hitting. And the reason that it's dropped so much is because they were actually restructuring their company. So they have actually been restructuring over the past couple of years, which is why I believe we've seen a big downturn like this. And since they've been restructuring, now they're restructuring themselves for profitability. They're getting into the coronavirus stuff like the masks and the test kits, and they're securing government contracts for those things. And those are things that I think will really help 3M in the long term, which is why I have personally bought 140 shares of 3M stock to hold long term, three years plus. I'm looking for 5 years, and I'm looking for to at least hit $260 a share, if not higher, within 5 years. But if you're looking to get into shorter term plays, you don't really want to hold your stocks for 2 to 3 years. You could start playing calls on 3M as it starts going up. So what I would do is just start waiting. You can see it's consolidating nicely down here. I drew a nice support. If it does consolidate and start rising from this support, just wait for key bounces, like how it bounces up and it hits the 100 SMA, then buy in some calls. Buying calls on the way up, then, if you don't want to hold it that long, you can just make money off the few months that it goes up. If you don't want to hold it, but keep in mind, you won't get the dividends if you do that, but calls and puts on it could be the way to go if you're playing it correctly, obviously. Now, the second stock I wanted to showcase is LYFT. And you can see the LYFT, ever since it had an IPO, it's just been falling very steadily down. And the reason for that is that they have not really hit very good profitability. As you can see here, they were losing $9 a share at this point, 68 cents a share here, 41 cents a share here, $1.19 a cent per share here. And the thing is that you're really looking for LYFT to compete with Uber, and you're looking for them to go ahead and get to profitability. And if you see their earnings start being positive, if they go from negative to positive earnings, I think that this stock could definitely fly and at least hit $60 or $50 a share, which is where I see a very good resistance at right now. But the thing is that you have to wait for them to hit profitability. But I do think that this is a stock you could watch for long term and maybe get in some calls while they're very, very low. And keep in mind, you'll have to buy a lot of time. It'll be very long-term calls. This is not a stock that will go up tomorrow. It's a stock that will take a year or two maybe to go ahead and play out because, like I said, they are trying to reach profitability. And whenever a company's trying to reach profitability, they start changing a whole bunch of things around, different aspects, different policies and stuff like that. And that's what's really going to affect LYFT stock, because all those policy changes and stuff cause them to lose money in the short term, but in the long term, it will cause them to become profitable. And we are waiting for them to become profitable and then get in. So I think it's definitely a good undervalued stock to buy. Good for the episode. I was looking at it last time whenever it touched this 100 SMA, but as you can see, it touched the 100, slightly bounced, and then fell through, and I ended up getting out at about a 5% loss. Not the worst loss in the world because it did do pre-market loss for me, but it's definitely a stock that I would definitely watch and be ready for them to hit profitability when they do. All right, guys, the last stock on this week's episode of Undervalued Stocks to Buy is going to be BAC, or Bank of America. We can see right now Bank of America over the past few years has steadily risen up very significantly, which is exactly what we want. They did have a very big downturn in 2017 when a lot of stocks did. They did fall about 30% down to the trend line and then back up, which is not too bad considering most stocks fell during that. And you can see they didn't fall as much as they could have. They could have fallen pretty far down to like $14 a share. But you can see if we go back to 2012, 2011, or 2008 levels, you can see that they hit very, very low, about $2 to $3 a share. And if you would have invested into Bank of America back then, you could have turned $1,000 into about $10,000 very, very easily, just holding it for about 5 to 10 years, which would have been a very good gain just on $1,000. Now, keep in mind, if you would have had $10,000 in there, you might end up with $100,000 now, which I don't know about you, but if I would have put $10,000 on this 5 to 10 years ago, I would have been very happy. Another big thing about Bank of America is that they are bouncing off of their 1,000 SMA right now. So let me go ahead and take off my trend lines. All you have to do to take your trend lines off is just right click and then click remove drawing. So I'll take off all these just so that we can, because I can easily put them back. All we have to do is just watch this red 1,000 SMA here. And we can see that the stock in 2016 comes down, bounces off the red 1,000 SMA. And now ever since then, it's been trading all the way above the red 1,000, which is right here. You can see it ever since this point right here, all it did is just go straight up. It went up over 100% since it touched that 1,000 SMA. Now, what we're waiting for is that we're waiting for it to touch it again. And what's it doing right now is that it's sitting right on the 1,000 SMA after a very, very sharp downward spiral. And the thing is that it's the coronavirus that caused this to happen. It's not necessarily because of loans or because of the banking industry or anything, but we are down about 25% right now just because of the coronavirus. And that gives a lot of investors a very good discount on stocks like Bank of America. So I would go ahead and place this on the undervalued stocks to buy list. And I think that this stock is definitely one that you could buy and hold for a little while, and it will definitely become profitable for you. If it starts to go down, just wait for it to break the low of this day here. Wait for it to break 25, maybe 24.50, and then get out. If it drops any more below this 1,000, I would definitely get out. But one thing you could do is just play calls on it as it starts to go up the next few days. If it does, if you see confirmation Monday morning of the market going up, then maybe Bank of America would be a good call for Monday. These long-term plays are definitely the trading style that I prefer. I prefer a long-term trading style. A lot of people prefer shorter-term trading style. And if you do, then just go ahead and just play the options, play the calls and the puts. Check out the link below to our Discord. Mike posts free options day trades every single day in there. Our Discord's popping. People are talking all day long about different market fluctuations, different news, Tesla, coronavirus, everything. Just hop into our Discord. If you guys enjoyed the video, please like and subscribe. Let me know your thoughts in the comments down below. This has been Tom, and I'll talk to you guys later.